Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of business filings. Today we're diving into a report from News Corp, and let's just say sometimes even the biggest media companies drop hints about what they're really up to in their filings. Think of it as reading between the lines of a press release, but for all you fellow number crunchers out there, before we get started, if you love breaking down these kinds of reports and getting actionable insights, make sure you're subscribed, and for even more real-time discussions and deeper dives, join our Discord community linked right in the description below. So what we have here isn't your usual in-depth financial picture like a 10K or 10Q. This is a current report, an 8K, which usually means something specific and noteworthy has happened. In this case, News Corp is reporting on its stock repurchase programs, essentially. The company is buying back its own shares. Why is this happening, you ask? Well, companies do this for a bunch of reasons. Sometimes it signals confidence from management that the stock is undervalued. Other times it's a way to return cash to shareholders when they don't have immediate needs for it, or perhaps they believe it's a better use of cash than other investments. It can also help boost earnings per share because with fewer shares outstanding, each remaining share represents a larger slice of the company's profits. Now, News Corp, for those who might not be as familiar, is a global media and information services giant. Think Fox News, The Wall Street Journal, The Sun, The Times of London, HarperCollins Publishing. They have a pretty broad reach across news, advertising, digital real estate, and book publishing. So when they decide to spend a chunk of money buying back their own stock, it's definitely worth paying attention to. The filing also confirms that News Corp's Class A and Class B common stocks are traded on the Nasdaq Global Select Market under the symbols NWSA and NWS respectively. This is standard information for a publicly traded company, but it reinforces that we're talking about a major player with shares available for anyone to buy or sell on the big exchanges. The main substance of this report revolves around their stock repurchase programs. News Corp is authorized to buy back up to $1 billion worth of its outstanding Class A and Class B common stock. This isn't entirely new information, as they've reported on these programs before in their quarterly and annual reports. However, the key detail here is that under the rules of the Australian Securities Exchange, they are required to disclose to the ASX on a daily basis any transactions made under these repurchase programs. So what they're essentially doing with this 8K filing is providing copies of the disclosures they made to the Australian Stock Exchange. These exhibits 99.1 and 99.2 are the actual records of their buyback activity as reported on the ASX. While we don't have the specific dollar amounts from these exhibits directly embedded here, the context tells us that these are the granular daily updates on their share buybacks. The report also includes a crucial disclaimer about forward-looking statements. This is standard legal language in many filings. It means that statements about their intent to repurchase stock are based on current expectations and beliefs. However, they also warn that actual results could differ significantly. They mention factors like changes in stock market prices, general market conditions, and applicable laws. Essentially, they're saying they intend to buy back stock, but they aren't absolutely committing to a specific amount or timing. Because the market is unpredictable, they also explicitly state they have no obligation to update these forward-looking statements if things change down the road, unless it's required by law. This is important to remember when interpreting any statements about future plans. Then we get to the exhibits section. This mainly lists the documents attached to the filing. As we discussed, Exhibit 99.1 and 99.2 are the ASX disclosures, and there's also Exhibit 104, which is an interactive data file. Think of this as a machine-readable version of the report, making it easier for computers to process the information. Finally, as with all SEC filings, there are signatures. This confirms that the report was prepared and submitted properly by authorized representatives of News Corp, in this case Michael L. Bunda, who holds several important legal and corporate titles. The filing itself is dated August 1, 2025, reflecting the timeframe of the report. So to sum up, this 8K filing from News Corp is primarily about shedding light on their ongoing stock repurchase activity. They've authorized a significant buyback program up to $1 billion, and they're providing the daily transactional data they submit to the Australian Securities Exchange as evidence of this activity. While it doesn't give us a full financial statement, it does tell us management is actively managing the company's capital by returning cash to shareholders through stock buybacks. Now, let's dig into what this really means. A $1 billion stock buyback program is a substantial amount of capital for any company. For News Corp, this represents a significant portion of their market value. What does this tell us about their strategy? On one hand, it could be a very shrewd move if they genuinely believe their stock is cheap. Buying back shares at a discount to their intrinsic value can create value for remaining shareholders. If you own a piece of a company and the company buys back a piece of itself that it thinks is undervalued, your remaining piece theoretically becomes worth more. However, we also need to consider the alternative uses of that $1 billion. Could that money have been better spent on acquisitions to grow the business? Or perhaps on investing in new technologies or content to stay ahead in the rapidly evolving media landscape? News Corp operates in industries that are constantly being disrupted. Think about the shift to digital media, the challenges in print advertising, and the increasing competition in streaming. Any significant capital allocation decision, like a large buyback, needs to be viewed in this context. We don't have the specific numbers from the ASX disclosures here detailing how much they bought back on any given day or at what prices. But the very fact that they are actively repurchasing shares and feel the need to report it daily to the ASX implies a level of consistent activity. From a Warren Buffett perspective, a company buying back its own stock is akin to him buying back his own business, and like any investment, you'd want to know if he's buying it at a fair price or a bargain. Without the specific financial details in this particular filing, it's hard to make a definitive call on whether this is a brilliant move or a missed opportunity. From a Warren Buffett perspective, a company buying back its own stock is akin to him buying back his own business. And like any investment, you'd want to know if he's buying it at a fair price or a bargain. Without the specific financial details in this particular filing, it's hard to make a definitive call on whether this is a brilliant move or a missed opportunity. But the sheer scale of the authorization suggests a confidence in their own valuation, or at the very least a commitment to returning capital to shareholders. The key risks for News Corp, as with any media conglomerate, are its ability to adapt to digital trends, manage its debt, and navigate the complex regulatory and competitive landscapes in its various markets. The stock buyback could be a sign of strength, or it could be a signal that they foresee slower growth and are looking for ways to incrementally increase shareholder value. My take on this report is that it's more of an operational update than a deep financial dive. It confirms News Corp is actively using its capital to repurchase shares, which is generally a positive signal of financial health and management confidence. However, without seeing the actual financial performance of the company in detail alongside these buybacks, it's difficult to say if this is the best use of their capital. It's a balanced approach, but one that investors should watch closely. Are they buying shares when they are cheap? Or is this just a way to prop up earnings per share? The lack of specific numbers in this 8K related to the buyback amounts means we'll need to look at their broader financial reports like their quarterly earnings to really understand the impact. The company's direction appears to be focused on returning value to shareholders, but the long-term growth strategy will ultimately determine its success. Alright, that's our quick decode of this News Corp filing. What's your take on these stock buyback programs and what they tell us about the company's future? Drop your thoughts in the comments below. If you found this breakdown helpful, please give this video a like. It really helps us out, and consider subscribing for more corporate insights delivered in plain English. And don't forget to join our Discord community for more discussions like this. The link is in the description. Thanks for watching, and we'll see you in the next one.